Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We'll try and do this in about 10-15 minutes. There's not a heck of a lot new to look at the market this morning, so I don't think I'll be talking too much. But just want to wait and make sure YouTube's on. There's not a heck of a lot new. So the Beamish is blabbing away. Here we go. Looking at the dashboard, as I've said repeatedly of late, you'll know that sort of TRI is ready, taking advantage of the full developer cycle when we have all our algos and signals all firing. So we're still very much in development, and unfortunately we use a chat server on the site called Rocket Chat. It crashed over the weekend, so our CTO had to spend all weekend trying to fix that. So we got put back a little bit, but nonetheless, it is what it is. You can see breadth data here, and if I look at things like the Russell 2000, small cap stocks are really struggling right now. But it rolled over there about the middle to the end of September. We had our cycle studies all roll over. Unfortunately, I had my computer crash this morning, so I don't have all my charts that I normally have up and running, so I'm not going to be making too much reference to a lot of the charts that you see. I have to get them up and loaded again. But that's the way it goes. So we'll just primarily operate off of this simple chart deck here this morning, give you an idea of what it is I'm seeing in the market. Interesting, my co-host here, Kevin, pointed out that we could potentially have a rising wedge here developing on the US dollar index. So thank you, Kavarkanator, the Duke of Albuquerque. This guy's such an awesome right-hand man for me. Not only is he an awesome stock picker, but he also helps me give you guys a better message. So thank you, Kevin. I would just simply say that we won't have any sort of signs of failure here until we actually fractal out. You can see about a month or so ago we potentially fractaled out, but we painted an inside bar and then up we went. We have been talking, of course, of late about US dollar index working its way up into key levels. I'm not quite ready to put a fork in there just yet. Usually these candle body gaps, like you see on here, usually they like to be filled in with candle bodies. So you can see that that's at 99.95. There's also another cheeky little gap just up top here at 101.33. We are pushing to higher highs, and if we do things like harmonics, AB equals CDs, and even this cute little, I think this is a crab, off lower time frames, they're both still suggesting up top here. Now, the market will do any old damn thing it wants. But if this is a fractal top, you can see I've noted this Monday's low. Now, this is a weekly chart, so we won't really know what this looks like for another 7 days. But we have to watch this bar, and then next week's signal will be generated off of the weekly chart. So we'll keep an eye on it. We do have Fed minutes coming out on Wednesday. There are a bunch of Fed speakers. I think Powell is even speaking twice this week. And, of course, Mr. Trump has got the Chinese in Washington, big trade delegation, all that kind of stuff. They said they sort of started off the conversations very nervously. You see the situation going on in Hong Kong. That's still a mess. So put it all together. I don't think we can really interpret anything out of the action just out of the gate, but let's see how those trade talks go. And let's see if Powell is relatively friendly in his speeches. I think the odds of a U.S. rate hike are gone up dramatically for the October meeting. And if we do just totally crap out here on the US dollar index, I suppose we can draw our reload zones and first stop targets. Come on, are you going to cooperate or what? Off of this recent high. And so now, 38.2s are all the way down here at 95. So, if the propensity for the U.S. to lower rates accelerates, if trade deals and stuff get done, we might actually see the US dollar come off here a big chunk, but it's very early in this conversation. Probably another week or so away before we really get any levels. And then on the flip side, we took a look at things like the British pound and the euro this morning. Turns out Goldman Sachs comes out and says that the British pound is a buy here. You know, looking at the price chart itself, I really like sort of the level down here around 120.5 sort of area, not here up at 123. I do like, and keep in mind, Goldman Sachs, usually we used to have an old rule that said whatever Goldman Sachs tells you to do the exact opposite. So I wouldn't be surprised if over the next couple of weeks into that Brexit event window, maybe we even get some sort of panic dump. If you are interested in British pounds and, you know, trading against the US dollar, all that kind of thing, the euro chart looks very similar to this. I would be hunting down a little bit lower here for a potential trade location. So, something to think about. So, US dollar hasn't topped out just yet, getting up pretty close to where we want to be hunting shorts, but it's not quite there just yet. Risk on, risk off. You know, I always like to have this conversation. Clearly, you can see risk off is coming off the table. I did hear that the Japanese and the Americans have inked a trade deal, so that's probably injected a bit of confidence into the market. As well, stocks seem to be recovering a bit from last week's drubbing. And oil appears to finally be catching a bid. Is Bitcoin part of this risk-on conversation? I do notice stocks up, crude up, and Bitcoin's up here this morning. And, you know, we could potentially be having a W paint here on Bitcoin. So, you know, be cognizant of that. We might go through a pretty nice little risk-on counter-trend rally here. It's totally realistic. Stocks, big tails and wicks like to be eaten. I wouldn't be surprised if sometime over the next few weeks we see this come back down a bit. Keep in mind that cycle thesis looks for a pivot back to the upside around the end of October. So here we are, basically the first week. We still got 3 more weeks to go on this to watch how the market acts into that sort of panic dump event, and that's also around Brexit and all that kind of talk. I'd also mention too that we are into the first 2 weeks of Q4 of 2019. So we do, to a certain degree, need to just simply watch what the fund managers are doing. And I'll be producing that first 2 weeks report at the end of this week just to get an idea of where they're putting their money to work. Risk on, and it looks very small here, but you can see small little green candles. Is it the start of a new bull? Tough to say. Risk off, I've been talking a lot about this recently. Bonds now on the weekly charts have actually come back up and are in the process of filling in a very noticeable weekly gap that was left open. If we actually inside bar here, I could potentially see a failure here, and that might set up actually a really nice little trade for me. You've heard me talking lots about sort of not interested in buying gold here and thinking that price needs to come back down. You can see the waffling. We never really did get up into sexy trade location. I'll try and find those charts for you guys tomorrow, but nonetheless, my propensity to go and buy gold and precious metals names right here is definitely curtailed. As a sort of an anecdote, I talked to you guys about this last week, but I'll just sort of make reference to it again. I'm the type of guy where I'm going to be hunting against bottom ends of ranges, and as soon as we get up into things like 50% rules, I don't want to be married to names. So you can just see, on balance, this guy had a big drop through the end of the summer. If we change this to a daily chart, hopefully you can see the cute little W that came in down here. Rallied up to 50% rules, and I was really sitting there humming and hawing going, should I just blow this thing out at the 50% level, or should I give myself permission to be greedy? And I had suggested that I saw this AB CD, and so on the sort of tagging of that level, I wanted to get out. And so Friday I liquidated half of the position. Basically, I have a risk-free trade to all intents and purposes working on this now. I'm not really in any big hurry to do anything here with the rest of this trade. I would consider it done, and now I want to take the remaining shares and just throw them on the pile and move on to the next name. So just an FYI there. And like I said, with regard to actual like gold and silver and actual commodities, actually owning them outright, I'm a bit leery here. It's scary monsters. Finish off today. We'll take a quick boo at crypto. Of course, on the weekend broiler chicken show, I was talking to you guys about a fun little day trading model that I had set up over the weekend, and it was just killing the market. But it was interesting to see that as the market was rallying back here overnight, and the dailies are still pointing down. 4 hours are threatening to turn back up, and on this counter trend rally back up here, the actual algo had to take a couple losses here. So it's interesting. We had a loss here. We had a move stop to scratch here. We had a loss here, and then right through the New York kill zone this morning, we had another loss. So good to see. And if anything, it's really important when you are building these setups out. You can't take just like one little pocket of trades, like this pocket, all winners, and it's like, oh my God, this is bulletproof. Because, this is a statistics game, and usually if you have like a whole bunch of winners all together, you're going to get a cluster of losers. And it's also really important to forward test in real time any setup. And I can clearly see that overnight I would have been pretty challenged here. But it is what it is. Any way you look at it, if I get a 4-hour moving average that turns back up off of this institutional bias, then this whole model just goes back into the cupboard. And, if anything, that's good because, who wants to be a bear? I'd rather be a bull. But, as long as we're still pointing down on the dailies, I can't hunt long. So this is, in my opinion, still very much in cleanup mode. This has not turned up just yet. We'll get one of these little messages when it does. But my hunch is this thing's looking very uppy. I don't see any reason why it wouldn't. So when we look at, something like Bitcoin, what's weird is that I sort of made reference to this. Not sort of. I have made reference to this repeatedly. Good old 50% rule. In this particular case, looking at Coinbase, and I don't know whether I've done these numbers exactly right. You can see 50% level sitting 84.98 off of Coinbase. I've done some of these off of Stamp and stuff, and it's like 8,500. And in a weird sort of way, the message of late has been we probably want to now oscillate around the 50% level, and it sure looks to me like that's exactly what she's doing. I still think, and Kevin and I were kind of joking, musing about this earlier, we've got this validated AB equals CD just floating out here now, right? Which its target is just a hair below where we are now. And then too, if we think about things like good old Mountain Man and reload zones, Mountain Man's actually sitting right down here. So not the best trade location, in my opinion, down in here. But I will say that, I did notice that on the site this morning, some guys were coming in saying, look, we had a nice test of the lows through the weekend. Right? We had a nice counter trend rally. We had a pullback. We had a test of the high. We had a deep test of the low. This is a harmonic pattern. And I also did hear people talking about things in the lounge. And this is great. This is exactly why I built the site. 1 + 1 = 3. Let's all work together for trade ideas. And people were mentioning, Willie's looking awfully oversold here. They never quite got stupid. So that's interesting. But if we look at things like RSI Ws, I've sort of talked to you guys about this before. You can use RSI if you get like multiple W's coming in. Hopefully you can see this bigger W, but then this W and this W here. So clearly there was a pretty powerful momentum breakout right through here. And you can see as price is dumping down here, making lower lows, the MACD histogram stopped making lower lows and actually started ticking up. And lo and behold, I don't know whether you can see this or not, but a cute little W came in there. And interestingly enough, if we just simply say, look at, I'm going to buy the W, and I'm going to risk to a break in new lows, and I do a 2-to-1, well, that was right up in that area there. So all the harmonic people, way to go. Awesome trade. Excellent stuff. Great looking chart. Where we go from here now, though, is tough. Because we had sort of talked about in the daily brief the weekly charts. If I look at something like Bitcoin, and we had Seward on the call today. Mondays he gives his report. And I'm a little bothered by the fact that 30 SMA now, you can see off the stamp chart, there's that 50% level, 8,500. The 30 SMA here off the weeklies is now sitting 84.94. So clearly that's going to be resistance. And then notice the 13 EMA is sneaking its way down here. So this is going to be pretty stiff resistance. You'd have to get some sort of like major fundamental shift here to actually break this. And because this past week was a new low, at best, maybe we have a 3-bar fractal that's trying to form here. I do like the idea of that counter trend rally and, you know, the 4 hours threatening to go back positive. Nice little counter trend rally up into these candle body lows. Sort of kiss this structural level from the other side and then roll back over. So it was cool to see in Seward's perspective how he's looking for basically the same thing. This is a still very sticky area on the price chart. And as I said there to start off the conversation, I'm not overly impressed with where we actually turned here. I still like the idea of this AB equals CD getting hit and this 61.8 getting hit. But we'll see. Only time will tell. I mean, maybe if we're lucky, this is actually some sort of floor. You know, where that key low, obviously, you know, institutional fingerprint. Where did the big boys stop the bear before? Turn it back to bull. You know, if these lows can hold in, then it means that whoever has a vested interest in defending that level came in and defended the market again. So we'll keep an eye out for that. But you can see internally off the weekly charts, there's nothing for us to get too excited about here. We'll finish off today's conversation with just a quick look at the intermediates. And while, you know, same sort of thing, if I look at things like weekly price charts and momentum, I don't see a heck of a lot to get excited about here. You know, OBV, you know, the volume push here is almost negligible. Nothing to do on MACD. RSI and Willie still working their way lower. No W's there yet. But, you know, hope springs eternal. Hopefully everybody looks at this and says, well, Brian, isn't that an inside bar? And indeed, it is. Right? Where this high, 57.75. Today's high, 58.65. So we went through that, and that was an inside bar there. So, believe it or not, and, you know, we often have said this, sometimes your first trade signal won't come in. Right, this one, it crapped out. Yes, it was an inside bar, crapped out, got stopped out. Sometimes you see that the second signal actually is the one that works. If you looked at this momentum and said, you know what, I need to see some more W price action. I need to see, you know, W's coming in on the indicators before I can get bullish. I don't have a problem with that at all. At the same time, too, as I've said before, you know, Markets will do any old damn thing that they want. You can see that we are technically in a reload zone here. So, if this is the start of some sort of bottom, awesome. A week ago I was feeling pretty sanguine about this whole space. There just wasn't anything here. So let's see how we do on Litecoin. Litecoin may be starting to give us signs of a turn. Don't really have any divergences. We do have these wide W's in price momentum and in volume momentum. This might be like a Davo kind of signal. We'll see if we can get some buying interest to come in here on this double bottom. And I guess, like when I was sort of talking in the daily brief, if you did decide to trade this W, maybe you probably have to use some high like that. And then notice that 50% of that range is just going to do nothing more than take us back to the original breakdown level. Maybe fill in that notch there. So, there is an idea for you to chew on in Litecoin. Still think it's a good idea to look at your assets versus USD. In particular, just to make sure that you actually are seeing floors. All right, I think I'll probably leave the daily brief recap at that. I hope that was of some value to you. Try to play from a position of strength. Try to build a trading plan that sort of articulates what it is you actually want to get out of all of this, where you're going, what kind of setups speak to you individually in the marketplace, which means that basically frames your behavior. And then of course, have a really good talk with yourself about what type of risk taker you are. And, if you can't handle sitting on losing positions, then that to me sounds like you're either a Joe Sixpack or a leverage trader. And if that's the case and setups fail, you just got to walk. Simple as that. All right. Have yourselves a great day, everybody. Play from a position of strength. PMA for the win. All the best. And the only thing left for Brian to say here is a big bye for now.